Clarivate plc is a leading provider of analytical solutions to accelerate the pace of innovation. The company prides itself on improving the way the world creates, protects, and advances innovation. The company's solution includes a scientific and research aid, as well as IP, intelligence, and protection across multiple industry groups. The company has two business segments: its Science Group, which represents 66% of revenue, and the Intellectual Property Group, that represents 34% of revenue. The company was founded in 1864 and headquartered in London, UK. Clarivate provides analytical and scientific solutions to thousands of customers in very data-intensive industries. According to IDC, the worldwide big data analytics market is expected to be valued at $274 billion by 2022, growing at a 13.2% CAGR. Much of this growth is expected to come from outside the United States, where Clarivate is extremely well positioned to capitalize. The company has many separate platforms, including the Web of Science and Derwent in the IP segment, that provide patent research and scientific literature to clients. The company's current CEO, Jerry Steed, is well known in the information services space, coming from IHS. The company provides a highly defensive business model with well-diversified global revenue breakdown and an 80% plus recurring revenue model. Because of this and several other drivers that will be discussed momentarily, it is recommended that Clarivate be added to the AIM International portfolio with a target price of $34.15, representing a 17.07% upside. On to my drivers. First, Clarivate has a very defensive business model. The company recognizes 82% a subscription model of recurring revenue. The company also recognizes 93% renewal rate with longer-term contracts. Clarivate is well diversified globally, with less than half of their revenues coming from the Americas. Secondly, Clarivate has had strong success with tuck-in acquisitions, including two acquisitions made in 2020 of DRG Group and CPA Global. Both of these acquisitions are expected to provide accretion value and synergies. Lastly, the company expects to provide margin expansions moving through future years. This is going to be done through two methods: internal cost reductions and accelerating organic growth. The company has recently found $75 million or so in cost savings in 2020. Current organic growth stands at an unimpressive 1%, yet Clarivate expects to continue to attempt to cross-sell through its new platforms and increase prices annually around 4%. This will lead to a leaner company while also providing margin expansion benefits in the future. Discussing my valuation. I performed three relative value methods: EV to EBITDA, a price to free cash flow using fiscal year 2022, and a PE to growth ratio. On my DCF, I used a WACC of 5.82 and a terminal growth rate of 1%. By weighting these models 50, 30, 20, 10, a price target of $34.15 was reached, resulting in a 17.07% upside. The company does not pay a dividend. To touch on risks. The company has execution of price and sales strategy risk if they are unable to execute on its moving forward strategy of cross-selling and in price increases. If the company does this, there will likely be bottom line pressure. Secondly, the competitive landscape that Clarivate operates in has the possibility to gain traction for other companies. Lastly, because of the company's constant acquisitions, they have a relatively high leverage ratio. And because of their interesting past, being spun out of Thomson Reuters and bought by a private equity firm and then sold to a SPAC, they have interesting ownership and capital structure requirements that are still elevated to this day, with 66% of the float available to the public. Touch quickly on management. Jerry Steed is the current CEO and has been with the company for the past year. He was previously at IHS Markit. Jeff Roy is the president of the IP Group, and Mukhtar Ahmed is the president of the Science Group. The board currently has 3 independent directors from the private equity firm Onyx Partners, which has a large stake in the company itself. Thank you very much for paying attention to my presentation, and I look forward to your questions.